Portugal's Golden Visa was once the fastest, easiest and most reliable path to EU citizenship, and investors poured in 7.3 billion euros to secure that opportunity. But with the real estate route closed, processing delays piling up, and now a proposal to extend the citizenship application process from 5 to 10 years, thousands of global investors are now asking, where do we go next? Hi, I'm Jeremy. I'm the CEO of Saving Partners and of Millionaire Migrant. I'm a Portuguese resident myself, but everything in my life and my career has been about looking at all the options objectively and trying to find out when is the right time to apply for something or to pivot elsewhere. Here's some interesting statistics that we have put together. We actually recently did a survey in one of my previous Portugal videos where the information was actually picked up by Forbes, talking about the mass amount of money that could be exiting Portugal if this legislation goes through to extend the timeline to citizenship. Firstly, the Golden Visa has brought in 7.3 billion euros since 2012, which is when the program first launched. Over 33,000 residence permits were issued to investors and dependents. China leads with 50% of applicants, so exactly half, followed by Brazil, obviously, 12%. And then you've got the US, UAE residents, that is not Emirati citizens, there may be, but not to my knowledge. We did do an Omani though, I do remember. Turkey, South Africa, all of these come in, making up the rest of those nationals. I would say probably India as well is going to be another national demographic within that mix. So where are we today and what has happened in the months prior to this inflection point right now? Well, firstly, it was extremely popular when there was a real estate route, but due to a lot of pushback, not just around the Golden Visa for real estate, but also around alojamento local, which is AL, which is the people renting on Airbnb, and then just generally the lack of supply pushing up rents in Portugal, the real estate route closed in, I think it was 2023. That at the time made up 92% of all investments. It is now only in funds, and they're very strict about those funds having no or extremely limited access to some kind of real estate asset within the fund itself. The processing times also went from a very reasonable kind of like 6-12 months, now got to 24 months up to 30 months processing time. And everyone is getting backed up. And don't forget, there's also other immigrant categories. So it's not just Golden Visa applicants. You've got other residents that are moving there. So they'll do a tax regime like the NHR and they'll move there, or they'll do other, they'll do a D7, a D2, and some of the digital nomad options or retiree options. So there's a multitude of different options. And then you've got illegal immigrants or people seeking employment. So all of this is all getting mixed together, and people are frustrated for the fact that they're getting bundled in and there isn't any segregation on a fast track or the capital invested. You know, IMA is, you know, being Europe and being very democratic and liberal is just trying to put everybody all together, whether you're contributing or not contributing to the society. So the proposal right now is suggesting to double the time frame from 5 to 10 years. It will have some exceptions for CPLP members, which is basically the overseas Portuguese community. So like your Angola, your Brazil, and so on. But everybody else is going to be up to 10 years. When you add on the huge delays that people are facing, as I mentioned, 30 months, almost up to 3 years, you know, and plus everything else that pushes it all down. Like, for example, when you apply for nationality, there's also a time frame for that as well. If you put it all together, a lot of people are saying, like, you know, feeling I'm hearing the word rug pull, but I think at the same time, it's just like, you know, this is a government. It can make its sovereign decisions to happen. It's very frustrating, but I'll come to this point specifically at the end of the video in terms of what are your options. But essentially, it's past Parliament review. It's now pending presidential review. So we'll find out in the coming weeks. Christmas is coming up. We'll see what happens there. It might even get pushed back to January. So it's got a lot of people on edge. And this is why we've done this video, because people want to know, what are my alternatives? What are my alternatives if I want to be able to have a European residency program with a path to European citizenship at the end? If at all, and if so, how long? So let's go through 5 options. I'm going to add on 2 bonus ones at the end, which I was thinking about this morning. And then I'm also going to sum up where people stand right now in Portugal. So firstly, we've got Italy. So Italy has been one of the net beneficiaries of all of this instability or the backups, the backing up of the application process. And it has its investor visa, which has been termed La Dolce Visa. This is very popular, particularly around Americans, because they're very familiar with Italy. They spend a lot of time in what I call the United States of Amalfi when I went there. But it's a country that they're familiar with. Some of them, they even have a lot of strong roots. So they might have Italian ancestry. Now that the citizenship by descent option has become much, much, much tighter, some of them missed the boat, including some of our actual clients. They just couldn't get the documents ready in time. And then if you look at the price point, it's at 250,000 euros in startups. So the threshold now is half what it is in Portugal. You also have other options at 500,000 euros investing in a company, and then you have 1 million euros in terms of a philanthropic effort, which is for a lot of people maybe a little bit too much. You also have a government bond option at 2 million euros if you feel comfortable investing in Italian government bond. The stay requirement is 0. Processing time is very fast because there's minimal demand at this stage. And there's also, and I'll do a video in the future talking about Italy, it's also got other kind of components to Italy right now that make it very attractive in terms of real estate, but also in terms of tax residency as well. Now, obviously, this being a golden visa, the whole idea is that you don't have to live there. So tax residency may or may not be part of your overall sovereignty stack, so to speak. But for some people, it will. The residency duration is 2 years, it's renewable. And then after 5 years, you can apply for PR. And then for the citizenship, you're essentially looking for around 10 years, which if considering Portugal is going to be potentially 10 years, adding in the 3-year time frame, the fact that you can start in 2 months for Italy, that could be very attractive as well. By the way, if you do decide that you do want to do the tax residency option, you need to be mindful of the fact that they're already talking about increasing the threshold from 200,000 euros up to 300,000 euros, which is the lump sum tax incentive. So essentially, you just pay to the government a fixed amount. Obviously, it increases the size of the number of dependents in your family, but they're going to increase that up to 300,000 euros. So if you do want to do Italy, contact us so we can start the whole process, build your sovereignty stack with the Italian Golden Visa, with the residency. And also I used to work in real estate in many countries, including Italy. So I'm very familiar with the process with the notarios and everything. So this could be something for you. But bear in mind that time is of the essence, because if you look at how the price in Portugal originally was at, let's say, 280 for low density areas, now you find yourself at 500. You have to understand that when you're in this industry, which I have been for 15 plus years, whether it's tax or citizenship or even real estate prices in the right location, you snooze, you lose. You want to be moving very quickly, be very decisive, and move forward at the right stage before everything happens. It's not something you can flick a switch and apply. It takes time to prepare your documents, time to legalize your documents, time to submit your application, and do that before the queues start backing up. Why would someone want to do Italy as opposed to Portugal? Well, I would say the price is less. I would say the time frame is faster. I would also even argue that the language itself, obviously coming from Latin, is probably going to be easier for you to learn than Portuguese. I know this because, or this is my personal opinion, is just the fact that I speak a few languages, and I always found Portuguese, despite speaking Spanish and French, was actually pretty tough to learn. Now, obviously, Brazilian Portuguese is easier, but whether you get to the language test and someone will accept that you're speaking Portuguese with a Brazilian lilt, you have to understand that that person will take a subjective view on whether they think that you can apply for the citizenship or not. And I know this because when I applied for my French nationality, that was what happened in the interview. They would ask you, like, why should I give you the French passport? Next, we've got the Greece Golden Visa. So this one, 250,000 euros also. So again, half the price. The backlog is kind of getting there. And again, because a lot of people have switched to Greece, it's always been around. It's always been very popular. The processing time's like 6 to 12 months. You do have options where you can start at 250,000, but you can only invest in specific type of real estate. So that means something, for example, that used to be a previous industrial project. So kind of following the renovation model that they used to have in Portugal when it was 280 and 350 in high density areas. You can also buy something that you want that would just cost you 800,000 euros. So again, they looked at the Portugal model and have copied it and in some ways improved on it. You have other options as well, which is shares, bonds, funds, and a bank deposit as well. Bank deposit is 500,000 euros. So if you don't want to be in some kind of Portuguese fund, which you have concerns about the liquidity of the fund or just generally the fund market, maybe a bank deposit at the same price in Greece could be interesting for you. Residency duration is 5 years renewable, and then afterwards it's permanent residency. You can, after 7 years, you can apply for the nationality, but then there's learning Greek. And, if you ever heard the expression, it all sounds Greek to me, then maybe it's not going to be that easy. It also, and this is really kind of like almost undercutting Italy, also has a non-dom program. So if you want to live in, probably not Mykonos or somewhere too expensive like that, but you can live in a low-cost area in Greece, just like you would in Italy. The difference is that whereas Italy is 200 and on the cusp of moving to 300,000 because of all the high net worth, especially private equity professionals who move into Milan, for example, Greece is still at 100,000 euros flat tax, valid for 15 years. So that's extremely attractive. Imagine just moving there, not paying tax for 15 years. You know, I myself haven't paid tax for 25 years, but that's 18 in the past, and I got another 7 to go as part of doing the NHR in Portugal in when I started the process. So, you know, if you want to do your mathematical calculations, quarter of a century of tax-free earnings on everything that you generate all around the world is extremely attractive, and it goes without saying. You also get the Mediterranean lifestyle, low cost of living, Schengen access, business opportunities, the same as you would in Italy, for example. It's Southern Europe, so if Portugal frustrates you, as I can definitely speak to experience, it frustrated me a lot, then, you know, unfortunately, you're going to get the same in Italy and Greece, and in some ways, it might be actually get worse. And if you still want to stay in that part of the world, but you want to get the tax incentives, but you also want to get the residency incentives, then why don't we just throw in Malta as well? Not a lot of people talk about it, but it has a residency-by-investment program. Don't confuse it with the citizenship-by-investment program, which has now been shuttered and is now a citizenship-by-merit program. You know, we have processed both options for our clients. We have done the MRVP, which is the Malta Permanent Residency Program, but we have also in the past obviously processed the Malta CBI, and now we're processing citizenship by merit applications as well, which I think is quite an interesting option. But essentially, the Malta Permanent Residency Program is very attractive for a lot of people. This one is 375,000 euros in real estate. Okay, it's a higher threshold, but it is in real estate. But you also have the option, if you want to stay asset light and you want to tie up your capital in a country where you're concerned about, you know, real estate prices or your ROI, 14,000 euros a year, you can lease a property. You also have a 37,000 euro government contribution, 2,000 euros to a non-governmental organization as a donation. And then you also have to have 75 to 150,000 euros in liquid financial assets, demonstrating a total asset of 500,000 to 650,000 euros. A little bit complex, but I think it's also nice that they break it down, because I think sometimes people look at what's best for them, but my personal experience is that you've got to have a win-win for the government the other side, because if they're not getting a win-win, it's going to be very easy for them to say, why are we even doing this? This doesn't make any financial sense. So I think Malta kind of has got it right, because obviously you say, well, I just want to buy real estate and not have to worry about it. But how is that benefiting the local economy? Because I can tell you, these are sovereign nations. They have a right to democratic law, and they'll say, you know what? My rent is going up. I'm getting evicted. I'm surrounded by Airbnbs and foreigners, and maybe some people like wealthy foreigners, but some people don't like wealthy foreigners. Then they'll say, well, what's in it for us? So I think Malta is kind of looking out for its own people and say, well, let's get them to pay a little bit more. We maybe won't get as much business as the other programs, but at least we can see this program being stable for the foreseeable future. So if you want a program that you think is going to be sticking around for a long time, I don't see Malta changing much. In fact, I don't think a lot of this legislation around the residency, not the citizenship, is going to change much in the short term. So if you just want to have that clear pathway, which you didn't get in Portugal, for example, or you thought you would and is not transpiring right now, Malta could be your option. The processing time is 6 to 8 months, so no big change there. The residency duration is 5 years and it's renewable, and you can apply for citizenship after 5 years of PR. And of course, talking about Malta, it wouldn't be wouldn't do it justice if we didn't talk about tax. Malta being great for tax, for setting up companies, bank accounts, not so much. But no foreign income tax, capital gains tax on non-doms. It's the best country for English speaking. If that's what you really want to have. Everyone is very, very Anglophile and Anglophone. So that's something that may attract you. What might not attract you is the fact that of all these options, it's the only island. So you might get a little bit of that island fever. Again, Schengen access, safety, education, family inclusion. If you want that, you'll find that in Greece and you'll find that in Malta, just as you probably enjoyed it in Portugal. That was one thing that I really loved about Portugal. Next up, we've got Latvia. So Latvia, I think I looked at the data on this, I think it was about a year ago, but 10% of applications for Latvia were actually from American American citizens, which is very interesting. I'm going to go through some of the points here that maybe will justify why specifically Americans take up a disproportionate amount of applications within Latvia. You've got the residency by investment program, so it's a temporary residency. The investment is 50,000 euros in a business. So again, if you really need to have a business in Latvia anyway, you're killing two birds with one stone, because you want to have a business in Latvia and it allows you to comply with the threshold of 50,000 euros. It's the lowest price point by some distance with all these options. Or if you want to do real estate and you want to compare apples with apples, just like you would in, for example, Greece or Italy, you've got 250,000 euros in real estate. Now, is it the most liquid market? No. Geographically bordering Russia, so that could be kind of a risk profile. Let's see how this special operation pans out. But that's something, where we see a lot of heavyweight sovereign wealth fund backed real estate developers from the UAE going there and investing there. So you can see transformation projects, huge waterfront project that is being renovated, and you want to pick up some of that opportunity. You can also reach out to our dedicated real estate department that is fully licensed and can advise you on that. If you don't want to do real estate, maybe you want to do a deposit, you've got bank deposit option, which is 280,000 euros. And then you have bonds at 250,000 euros. Some of the banks that we work with over there actually generate returns that are way above what you'd be getting typically in a European bank. So we're talking about 6, 7, and 8%. So if you're interested, again, give us a shout. Stay requirement is 0. Processing time is 1 to 3 months. However, the residency duration is 1 year renewable. So you need to go back every year. And that is a big turn off for a lot of people. You can get PR after 5 years, but that requires living for 4 to 5 years in Latvia itself. So again, this is something that may or may not be attractive to you, but if you're extremely mobile, then maybe, considering Portugal was 2 weeks every 2 years or 1 week every 1 year, then there's not really much of a difference. Citizenship path is 10 years, and I think you can understand why Portugal looks at all these other countries which have a 10-year pathway. Even the UK right now, I think, is a country that will start seriously looking at moving to 10 years when basically the whole world speaks English, so they're inundated, as we can see from the immigration that is coming in. They'll probably move towards 10 years. So Portugal moving to 10, kind of in line with things going forward. Latvia, on a tax note, is not as attractive. It's 25 to 33% personal income tax. So I think that's a little bit less from Portugal from my recollection, or kind of in the same ballpark. 20% corporate income tax. That one I think is a bit more attractive than Portugal. Benefits, affordability, Schengen, stability, safety. A lot chillier. It's going to get darker a lot quicker than it would in Portugal. But this could be something that for those people who would look at it and say, you know what, if I'm just about to start Portugal, those of you who you're in, you can liquidate your fund. You probably take a bit of a haircut, 10, 15%, depending on what the terms of the fund that you've invested in. And you say, you know what, let me just start afresh in Latvia. Take away that 450,000 euros. Let's say you do the business at 50,000. Take away that 450,000 euros. Invest it in everything else. And, the ROI you'll be getting on that 450, be it gold, crypto, stocks, real estate, whatever it may be, you're going to come away definitely in the upside, of course. Lastly, you've got Hungary, and this is before I give you my 2 bonus thoughts. So Hungary is the guest investor program. We were involved in the early days of when the program was being initiated, in terms of, originally it was going to have a real estate component, and then they scrapped that because, again, they probably looked at, the average Hungarian. And that's one thing you kind of might need to give credit to Hungary, is that they really are looking after themselves, because they don't align with a lot of Europe's thought process. But essentially there was going to be a real estate component, but at the 11th hour, they pulled it out and made it just pure a fund. Now, obviously, some people would say, okay, that's a bit interesting, because it's, I can't really quantify my asset through a fund. But other people would say, yeah, but at least it's not like loads of people buying up property in downtown Budapest, which is a stunningly beautiful city. If you haven't been, I highly recommend going. I've been to, I think, every capital city in Europe, and I think Budapest really doesn't get the attention it deserves. But essentially, it's 250,000 euros in a property fund, or a 1 million euro donation to higher education. The stay requirement is 0. Processing time is 4 to 6 months. Residency duration is 10 years. It's renewable. However, it can only be renewed once. So you've got 20 years of residency, and then after that, you're going to have to really decide what you want to do. Citizenship is after 8 years of residence. So again, if you fancy learning Hungarian, good luck to you. I once met an Iranian doctor who spoke fluent Hungarian. So, there's hope for us all. Hungary also is very attractive for corporate income tax. Again, nobody really talks about this. It's 9% corporate income tax, very attractive. A flat 15% personal income tax. I wish countries like the UK and France, maybe it's too late to save those two countries at least, I wish they would look at something like this. This is very much pro-business, pro-economy, but unfortunately, we're in worse situation in the UK and France and a lot of Western Europe. It's a territorial tax system, so you've got full exemptions on your dividends, capital gains, you've got no withholding taxes, and you have favorable CFC rules. So if you want to know more about CFC and PE, which are the two most critical terms that you need to know when it comes around tax, then watch my colleague Irena's videos talking about this. So CFC is control foreign corporation and PE is permanent establishment. The benefits are the same: Schengen access, family inclusion, EU citizenship path, affordability as well. It's really affordable to be in Hungary right now. And again, I think the only issue I would say with Hungary, it really depends on your political leaning. I've got some clients who said, I'm not doing Hungary, I don't want to be part of Orban's thing. And then I've got other clients on the other side that say, you know what, I'm really all in there, I want traditional values, etc., etc. I'm not here to judge. Really, at the end of the day, I've never really had a horse in any race. I'm extremely apolitical about how the world is going. I see it all basically as something where we're being weaponized. That's my own personal opinion. So really take it for what it is, and then just remain sovereign to yourself. I think that's the main takeaway that I would like to give. So looking at all these options, one of these might be for you. What I want to add is just the two bonus ideas that I had in mind. So you've got countries like Cyprus that is part of the European community but doesn't have Schengen access, but you could take a hedge where you can invest in real estate. I believe the threshold is 300,000 euros if it hasn't changed. I think that's pretty much it. But 300,000 euros, you can buy real estate in Cyprus. Now, is it, what type of real estate market is it? Well, we helped a lot of clients to obtain the citizenship by investment option in Cyprus previously. Look, there's a lot of Russians who like it, a lot of Brits like it, a lot of Lebanese and people within the region who like it. So yes, I'd say that you'd have a very international buyer market. So it is quite liquid, but real estate there, I don't know if it's really for me at this stage. However, if you're seeing that as a play to be able to get Schengen access, it's already an EU member state. You will have to spend time there. But the fact is, it may be for your part of the world, it's tax friendly, it's extremely tax friendly country, obviously, or proximity to you if you're living in this part of the world of Asia. Get in there, get a property, and then eventually you will have Schengen access. But I also have clients of mine who've been a Cyprus resident and noticed that it's very easy to be able to get access to Schengen as a result of the Cyprus residency. So that's one option. The second option, Montenegro. So Montenegro has residency option there. It's something that I might have a look at, because if you do have the residencies there, it's literally next up in terms of obtaining, becoming a member, Ascension member of the European Union. So we're talking about potentially 2-3 years away. Who knows, with the European Union, they'll get around to it one day. So we processed quite a few applications during when Montenegro had its citizenship by investment program, which subsequently closed. Again, you notice that a lot of these programs are closing or going up in price. So I'm telling everyone it's better to start a year early than be a day too late. But Montenegro, there could be a play there where you say, you know what, I've become a resident there. And then when it does join the EU, I've basically hacked it. It's a bit of a shortcut. We're going to dig a little bit deeper there, because obviously there's no end of people from those two countries and say, oh, come and invest in here. And this is one of the strengths that we have, is that we scrutinize everyone. We don't have a dog in the race. So we're all about being proactive in this company. We wouldn't be as big as or well-respected or international as we are today without being proactive. I mean, that's what people pay us for. However, whatever happens in Portugal, you have all the cards in your hand to say, you know what, I'm out of here. And I'm going to look at any of these 5+2 potential options here. Or you might just have to grumble, suck it up, and just go through with it, because you looked at these 5 alternatives I gave you and you say, none of them really match what I want in Portugal for the time duration, for the capital invested, for the lifestyle, for the country, for the people, the minimal residency requirements, the path to citizenship, and many other factors around it. But the fact is, the choice is in your hand, and this is something that we preach every single day. It's just like, countries compete for talent and capital every single day. At least if you applied for Portugal Golden Visa, or at least if you're about to, you're making a proactive step to be able to build your family legacy or to build your personal legacy, because the world is getting very choppy and just having zero options is not an option at all. Thanks so much for watching. See you soon.